8:26 this morning, an hour before the bell, one wire decided the whole day. Iran was reported to have moved from a defensive stance to a fully offensive one. Crude pushed toward $91, the index opened into it and leaked all session, and it finished near its lows at 7,745, off 0.5%, with the fear gauge back above 15. This is the Algo Index market close, Monday the 17th, and the number that explains the drop was not in the stock market at all. One number, decided in two other markets, explains the whole 0.5%. It was not stocks selling stocks. Stay for it, because it reframes every level I am about to walk. What drove it came from oil and bonds, not stocks. Crude above 90 lifted inflation expectations. The 10-year yield rose to 4.72, and stocks and bonds fell together, the mark of an inflation scare. The dollar and gold sat still, and Bitcoin gained 2%, none of it a rush to safety. Dealer hedging ran $9 billion negative, the call selling forcing more future selling into the bleed. The loudest ticket of the day was a bet on turbulence. Someone bought about 146,000 volatility index calls at the 24 strike for near $11 million and lifted the offer to get filled. That is a deliberate hedge against a September volatility spike. Placed on the exact afternoon, the fear gauge sat 1 point off its low for the year. The screen said calm. The biggest buyer paid up for the opposite. The real read is protection. Volatility here is mispriced two ways at once. 1 month implied is 2 points under what the market has delivered, and its 1 year rank is under 6%. 29 basis points priced Monday against 59 delivered. Yet the surcharge for downside cover sits near the 96th percentile of the year. The crowd prices almost no movement, while paying a yearly high for the insurance that only pays if it is wrong. Grading Friday, we said defend 7,775. The market lost it and settled 30 points under, so the cautious call is the one that paid. Into Tuesday, the bias is cautiously lower, because dealers stay positive and the flip sits 63 points below. Import prices hit Tuesday, but Wednesday stacks a bond auction, the Fed minutes, and the volatility expiry in one afternoon. That is where the week is decided. Open the Algo Index Trading Journal free at members.algoindex.com/auth/signup, where every trade you log is scored against the live market print at that exact second. The dealer level scorecard stays public at algoindex.com/tools/gamma level accuracy. Import prices land tomorrow, but the real work is Wednesday, and I will be back after the bell.